Good morning. My name is Myron Frans, Commissioner of Revenue for the Department of Revenue for the state of Minnesota. Welcome again today. Pleased that you can come and hear an update on what's been happening here at the department working with our partners both in the private sector and here implementing the changes that we need to make. Assistant Commissioner Steenblock, who was here on Monday, she will go through some of the changes to give you an update on the progress that we've made. Then I'm going to go through some of the other changes that occurred in the bill, not just the retroactive tax cut changes. We want to focus on that first, but I want to go through some of the other changes that were made in the bill that was passed last Friday, and then Director of Communications Janelle Tummel will provide kind of an update on our communications going forward. So, Assistant Commissioner Steenblock.
Good morning. My name is Terri Steenblock, Assistant Commissioner of Individual Taxes.
Pull the mic in front of your mouth.
Yes, I can. Sorry. Again, my name is Terri Steenblock, Assistant Commissioner of Individual Taxes, and today I want to provide an update on the progress that we've made in reference to the middle class tax law changes that affect tax year 2013. On Monday when I talked to you, I talked about how we would be prioritizing our work. And our first priority would be to identify the changes to the forms and the instructions, and also work with the software vendors to make sure that taxpayers who have not filed yet can file by the deadline of April 15th. So our progress in that area, this week we held 2 conference calls, one with the software vendors and one with the tax preparers. We had over 1,000 people participate in those calls, and the purpose of that call was to walk them through line by line what the changes were in reference to the 2013 taxes so that they can begin to look at the process from their perspective, so that the preparers know what they need to do as far as filing returns, and the software vendors know what they need to do in reference to beginning to program their software. The transcript from that call is also available on our website. We have both the transcript and the video, and we put the transcript out there so that, again, there's a visual reference for both of those communities to reference as they're getting their hands around the changes that are here for us today. We have posted updated instructions for both the individual income tax and the homestead refund credit for homeowners and renters. That information is on our website on that same page as well. And again, the purpose behind posting those instructions is so that both of those communities can begin to understand the changes. It's also available to members of the public as well, so that they can look at the instruction booklets and begin to understand a little bit better what the changes are. We have posted draft copies of the forms for the software vendors, and I want to reiterate they're draft copies at this time. And the reason why we've posted those for the software vendors is because the vendors need to program their forms so that they line up in a certain way or shape so that they can be read by our system. So they have draft copies of the forms. We hope to have the forms finalized and available to the public shortly, but we are making progress in that area. The second priority that I talked to you about on Monday was in reference to our system and making sure that our system is ready to go and that we're prepared to accept returns and make sure that we're processing accurate returns and issuing refunds. So in that area, we have identified all the development requirements. The developers have been working on making the system changes. Some of those changes have been made, and we are now testing them on the business side. We cannot release that until all of the changes are made. And then what we need to do is, once all the changes are made, we need to do what we call end-to-end testing and make sure that we're testing it from the time the return comes in to the time that the refund is processed to make sure that the system is performing accurately. So we have made progress in that area, and we will continue to work on the development and testing to make sure that we have that available for folks. I did want to touch on a couple questions that we've received, some reoccurring questions that we've received here in the agency. One of the questions that we've been asked is, what happens if I filed and I had a balance due? Should I pay that balance due, or what should I do? And the answer to that question is yes. They should pay the balance due by the April 15th due date. We will, again, review the returns that have been submitted and make those adjustments just as soon as possible. And again, that was our third priority. So one of the questions we've been asked quite frequently is, how soon will I get my refund? When will my return be processed? And so our third priority was, after we had the forms and instructions in place and after we had the system reprogrammed, we would go in and review the returns that have already been filed and make adjustments to those. So just as soon as we finish that first and second priority, we'll begin to look at that population and have a better idea of timeframes. The other question that we've had quite a bit is, do I have to wait to file my return? And I want to reference the chart here behind me just as a reminder. We are telling people to wait until April 3rd to file their return. And the reason why is because the forms and the instructions and the software will be completed by then, and they'll be able to file an accurate return with the new law changes, which means that they'll get their refunds quicker. If the tax law change does not affect a taxpayer, they can file now. If the tax law does not affect the taxpayer and they have already filed, they don't need to do anything. So that population is really okay at this point. They're taken care of. If the tax laws do affect the taxpayer and they have already filed, they should wait until they hear from us. And that will be the population that we will review, and we will contact them to let them know what has happened with their return. If they do, if the law changes do affect the taxpayer and they have not filed, again, they should wait until April 3rd to file with the new tax law changes so that they get their refund just as quickly as possible. And then finally, I just wanted to mention, on Monday, one of you had asked a question about the income qualifications for the 10 tax law changes. We have updated the chart. There's a chart here in front of me, and that chart is on our website, and it does include the income qualifications for the 10 tax law changes that we talked about on Monday. And with that, I'm going to transition it to Commissioner Frans, who will talk about other items that were in the bill.
Thank you, Assistant Commissioner Steenblock, and I really do want to say thanks to all the Department of Revenue employees who've worked so hard on this, and in connection with the private sector software providers and the tax preparers around the state have been very cooperative and have provided us with a lot of insight. I just want to take one brief moment to go through a couple of examples of this tax law change, and then get into some of the other things that were included in the bill that was signed last Friday. Because I think these examples really help people understand the simplicity that this new change will have once it's fully implemented. I just want to use a student loan deduction as one example. So for 2013, the student loan interest deduction allows a wider range of former students paying back loans to deduct up to $2,500 in student loan interest from their income, so they won't have to pay tax on that. Let's say, for example, a former student making $55,000 a year now is paying back their debt from the student loan interest. They are deducting up to $2,500 in student loan interest from their income. The former student would save, in that case, $176 on taxes that they wouldn't have saved but for these changes. Now, in the marriage penalty area, we've had a lot of questions about the elimination of the marriage credit. This is not happening for 2013 tax year. It is happening for 2014 going forward. But I do want to mention that for the marriage penalty, in order to eliminate the marriage penalty on state income taxes, the federal standard deduction has been increased for 2014. Therefore, this eliminates the marriage penalty without any work required on behalf of the taxpayers. So when taxpayers begin filing next year for 2014, they will receive the benefit of the standard deduction being increased, so that there will no longer be a penalty for married couples. That's about 650,000 married couples that will benefit from this marriage penalty elimination, and they'll save on average $115 based on this change in the standard deduction. Now, the working family credit has changed some too. In 2013, well, let me back up. The working family credit, just to be clear, helps those families who have earned income up to $42,000 in income. They can qualify for the working family credit. And the credit is equal to a portion of their income. We currently have 330,000 Minnesota families that qualify for the credit. Now, for 2013, we increased the range of income so that 40,000 families will receive a larger credit and 13,000 new families will receive credit for 2013 that are applying now for their tax law returns in 2013. Now, for 2014, we've increased the working family credit even more. We increased the credit in 2014 so that all families who qualify will receive a larger credit than they did in 2013, and more families will receive the maximum. Let me give you an example. In 2014, working parents with 2 kids, and let's say they make $30,000. With the 2014 changes, they qualify for a credit of about $2,000. In 2012, they would have only received about $1,300 as a working family credit. So that's the extent of an example of how this is increasing for 2014. Just one more example, then I'll move on to the other parts of the bill. One of the things that we've heard a lot of people that are concerned about is if they lost their home or if they sold their home for a loss in 2013. Well, if a Minnesotan lost their home in a foreclosure or they sold their home for less than its value in 2013, and let's say they originally paid $160,000, but their home sold for about $130,000, they will not have to pay $2,100 in taxes they would have otherwise had to pay based on recognizing that loss as income on their federal or state return. So we're eliminating the recognition of that lost income on their return. For example, some of you may have heard Brenda Scandon testify before the House Tax Committee. She estimates that she would have had to pay about $30,000 in taxes based upon the large loss that she incurred on her home. So this provision really helps people who have been through a difficult situation, sold their home for a loss, or had their home foreclosed. We will post these examples later today on the website just so you'll have them available as well. Let me just briefly go through a couple of the other parts of the bill, and then we can open it up for questions after Janelle Tummel gives us a communication plan. Another major part of the bill, $232 million, was eliminating the 3 business-to-business sales taxes. They are all repealed effective April 1. As you know, the electronic farm and commercial equipment repair tax was initiated last July, and it will no longer be effective after the end of this month or beginning April 1. This includes the repair and maintenance of farm equipment that some folks were concerned about. The warehousing storage services tax was scheduled to go into effect on April 1, and now it will not go into effect. The telecommunications equipment tax is also repealed effective April 1st of this year. So those businesses who have been collecting that sales tax after March 31st will no longer have to collect that sales tax. And if they're collecting sales tax for other issues, they can continue to collect sales tax for those. If this is the only sales tax they were collecting, they can either change their service on e-services, or they can contact us directly to no longer be identified as someone collecting sales tax. The estate and gift tax changes. The gift tax was repealed. There now is only one other state in the United States that has the gift tax, and that's Connecticut. It's repealed effective March 21st, 2014. Now, people are no longer required to file a Minnesota gift tax return. If you have already filed a Minnesota gift return, we will review the return and refund any payments you have already made. We'll go through all the returns that have already been filed. Estate taxes, we changed the estate tax for 2014. It was increased from $1 to $2 million, phased in over 5 years, finally being phased into $2 million by 2018. The punitive 41% marginal rate bubble that existed for the smallest estates has been eliminated. We now have the marginal rates that are adjusted each year, and the rates range from 10% to 16% when it's finally fully phased in 2018. So those are some of the other major items that were included in the $508 million tax bill that was signed last Friday. One of the things that we wanted to reiterate is that, we're only about partway through the session. Obviously, we've, through this process, have passed a $508 million tax cut bill, and we've also seen $150 million placed into the reserve account. First time the reserve has been increased since 2001. So we're looking now toward the rest of the session and how the governor and the legislature will come to terms on how to divide up the rest of the $1.2 billion surplus. But with that, I'll let Janelle Tummel talk a little bit about the communications plan, then we'll have questions.
Thanks, Commissioner. Hi, I'm Janelle Tummel, Communications Director at the Department of Revenue, and I'm just going to give you a quick recap of some of the things that we've done and our communication plan going forward. As we've been emphasizing, we're trying to provide clear and frequent communication to everybody so everyone knows what's going on, and we appreciate your help in getting the word out to taxpayers. So as Commissioner Steenblock said, yesterday we had 2 conference calls with software vendors and tax preparers. About 1,000 people participated, and we had really great questions from them. And we'll continue to do weekly calls with tax preparers and software vendors as needed. We'll be calling software vendors directly, individually on Friday, excuse me, and just to do a check-in and see how things are going. We still have our planned updates for general public, for the media, planned for April 3rd, April 8th, April 15th, April 22nd, and May 1st, and those are listed on our website. We've also updated our website. We posted the instruction booklets, as Assistant Commissioner said. We posted the video and notes from yesterday's conference calls. We've posted the video from our press conference on Monday. And just a reminder that the best way for everyone to find all the information they need about what's going on is our website. So revenue.state.mn.us, and on the home page at the bottom middle is a little orange button called Tax Law Changes. If you click there, that will get you to everything that you could ever want to know about this. And then another great way to get information from us is to sign up for our email updates. So again, if you go to our website and you find a little red envelope, you'll be able to click there and sign up for all of our email updates.